There you go, Claire. Thank you so much for that. I must have missed it. I'm going to blame the new LASIK. Couldn't see that little mute button. Thank you for the heads up on that. Appreciate it. New trader, nice to see you this morning. Guys, everything that you need, every resource, even a place for you to come in and ask questions, right? Everything that you need is presented to you. From the education page, there's two sections. There's a software user guide. This is your NinjaTrader how-to. If you're brand new to Nexgen, brand new to NinjaTrader, and you're working on getting comfortable with what you're seeing, hey Cal, nice to see you today. If you're getting comfortable with scaling charts, right, making it so that you never lose your information, daily computer preparation, connecting to your Ninja account, closing Ninja, setting up stops and targets. Guys, all of your answers lie right here. If you have a question about it, I want you to ask it in class. Good morning, Sam. Because that's what class is for, right? We're here to answer any and every question that you have. But if class isn't going on, I want you to know that that software user guide is a great resource if you are having questions about NinjaTrader. And then everything that I talk about, guys, and I can't stress this enough, there's no secrets. Everything that I talk about comes from this education page, and this education page is designed to build a foundation, to give you a basic set of rules, a set path for your first 20 trading days, to get you in the direction, that loving nudge to get you where you want to be. You know, I was talking to John a little bit. We talk all the time, guys. One of the things that you'll find is consistent is in Nexgen, we are always trying to make things easier for you. And I say this every day, but I wanted to put it in writing because I think that it's important to hear it and maybe to see it. For the first 30 days, that's 20 trading days, focusing on the high probability trend trade, right? Focusing on a trade where every chart agrees with every rule, strongest triggers, nothing in the way, entries where the market is likely to continue. If you give yourself a simple 20 days, what you're going to do is you're going to learn to read your indicators, guys. You're going to learn to read your charts, and you're going to put yourself on the path to becoming a chart reader. Chart reader mastery incorporates three essential elements, guys: where the market is likely to go, where the market is likely to continue, and where the market is likely to stop. The foundation that this classroom provides, if you're brand new on a demo, you're going to be able to do this within your first week or so. And then you're going to reinforce those rules, guys. And this is going to give you the ability to fluently read where the market is likely to continue, where it's likely to stop, where it's likely to go. And the idea is to build this foundation, right? To give yourself this singular focus, this laser focus in the very beginning, to keep it simple so that you now have a skill set that's going to allow you to make money. There's going to be a skill set that's going to allow you to find these winning trades, trades that win more than they lose, to stay focused on the best of the best. And then as you execute these trades, guys, your knowledge base is going to grow exponentially through your chart reading. But we're going to focus on this for 30 days. Is everybody comfortable with that? 20 trading days? Learning to read your indicators, understanding that what we talk about in regards to this first 30 days is focusing on entry and keeping it mechanical and giving you the best of the best and focusing on a trade that typically wins. Whoops. I don't know what I'm doing here. Focusing on a trade that typically wins 70 to 80% of the time when you follow the rules. Guys, can you see me okay? All right. So we're good, and we're not over limits yet, so we'll get Bobby back in here so he can see. Awesome. Good deal. So high probability trend trade, guys. 3 rules. That's it. Simplicity, right? Let's keep it simple. Let's keep it focused. Give yourself the best of the best advantages. We're having great conversations this morning. I'm going to give you everything you need. I'm going to trust you to focus on everything that you need. Your large chart needs to have strong trigger lines. That's your first rule. Your large chart needs to have no termination conditions. That's your second rule. And your small chart is going to give you your entry point. Guys, the formula for a trade, the equation. Hey, good morning, Christina. A trade is momentum, it's a clear path, in an entry area. This is in its most basic form. This is like saying that a car is an engine and wheels, right? There's more to it, but all you need to know is that if you turn that key and push the pedal, you're going to get to where you want to be. So a trade, let it be momentum, let it be a clear path, let it be an entry area, and guys, in the spirit of simplicity, let it happen on 2 charts. Only 2 charts initially are all you need to recognize these conditions being met. Guys, I can tell you that when I do my analysis for my own personal trading, I use 2 charts. I use a 13-2 chart, and this is a broad stroke of a brush, guys. This is a larger, slower chart in comparison to the 5-1, and I'm going to use one bar, a singular bar, the most current bar, and I'm going to be able to determine the direction of the market. If the background is green, we're in an uptrend. If the background is red, we're in a downtrend. Very simple. Give myself the advantage of trading with the trend. I'm going to determine whether my first 2 rules out of 3 are met for a high probability trend trade on one chart, on that larger, slower chart. I'm going to let the 13-2 lead the way. This broad stroke of the brush is going to tell me if I have that advantage of momentum. It's going to tell me if I have that advantage of a clear path. And when those rules are met on the 13-2, guys, we're going to refine that broad stroke of a brush. We're going to use the 5-1 as an entry chart. And that entry chart is going to have us refining the market down to a point where it's most likely to continue. And that's rule number 3 of 3, using that limit order to buy or sell a pullback at an area inside of favorable large triggers. It's going to allow you to reduce your risk. It's going to allow you to maximize your profit potential. Is everybody comfortable with this? Let's go 20 days, right? 20 trading days. Focus on the best of the best. Because they're 2 different time frames, Cal, if that makes sense. It's like having a clock that only shows hours and then a clock that shows seconds. They're going to look different, right? This one's moving a little bit slower, a little bit bigger bar structure. And let me show you the picture, and maybe this will clear. I took this picture because I needed a visual for me because I couldn't figure out how to explain it. Here we go, Cal. What happens in this one bar on the 13-2 happens in all of these bars on the 5-1. So what we're doing is we're using 2 separate time frames. The price will always be synchronized, right? The price will be the same on both charts, but the look will be different. From the bottom of this bar to the top of this one bar is from this pivot down here all the way to the pullback to the midband and all the subsequent bars in between. Does that make sense, Cal? Higher time frame is going to give you the overall temperature of the market. The mark on the left is not showing on the S. On these right here, are we talking about this picture? And I'm not sure which mark you're talking about. On my charts, Cal, can you do me a favor? Can you take a picture of what you're talking about and draw an arrow? Because right now I feel like I'm guessing a lot and I'm not entirely sure. Because I think that this is important, this clarity. 13-2 is your big chart. And I want you to notice this, 38.39.25 is the most current price on this chart. And you'll notice that it's the most current price on my smaller, faster chart as well. The difference is that this one appears to be moving slower. This one appears to be moving faster because this is a slower time frame, a larger time frame. This is a smaller time frame. They will look different. The one-to-ones will print different. The pivots may print different. The divergences will print different. Even the Fibonacci will print different because they are different time frames. Does that make sense, Cal? Or really everybody, because this may be a question that everybody was sitting on. Let's see what you got. Thank you. And what Cal's doing here is he's helping me out. So Cal, you're not looking at the most current information. See, you were assuming that I could see your charts, but I couldn't. Cal, do you see this white arrow in the upper right-hand corner? I want you to press it. Anytime your charts have that white arrow, see how yours looks like this? Just like that? If I press this white arrow, Cal, boom. Right back to the most current. Great question. And guys, that goes back to straight from the software user guide, scaling charts. So practice with it a little bit. Cal, perfect question. Because this is a very common one. How come my 5-1 isn't working anymore? How come they look different? Well, and the secret, guys, is this black highlighted number is always the most current number, the most current price. And then Cal, if you wanted to close that gray gap, you could also push the arrow right here and it'll push it right over like a typewriter. You guys remember typewriters, right? All right, so let's talk about our equation. Momentum, you're welcome, Cal. Clear path and an entry area. Well, let's start with momentum on the 13-2 chart. In an uptrend, when my background is green, my small triggers are above the large triggers. My large triggers are wide. They're angled in the direction of the trend. It's the space created between these small and large guys that let me know that I have a strong trigger look. As the smalls break away and accelerate, this gap lets me know that the odds are favorable for the market to continue up. This is what we call a strong trigger look. In a downtrend, when the small break below, the large are wide, they're angled in the direction of the trend. Guys, it's this gap between the small and the large triggers that lets me know that the odds are favorable for the market to continue down. Rule number one, must have strong triggers. Rule number one provides you the advantage of odds favorable momentum. You're going to commit to this look initially because when those small triggers return back to the large, they work their way inside. Guys, this is what we call a weakening of the large triggers. Anything can happen up or down. In the beginning, we're trading the best of the best, the highest probability. And the best of the best begins with that strong trigger look. That strong trigger look, when we accelerate away until it returns, guys, this is where you're looking for that high probability trend trade. In an uptrend, you'll notice it doesn't continue to the end of the trend. Eventually, there'll be opportunities up there, but in the beginning, we're going to stay focused on the best of the best from that point where they accelerate away until they return. Give me a Y in the room if you're with me. Rule number one, strong trigger. This is your look. It's easy to recognize, right? Most of my brand new users recognize strong trigger lines on day one. And they have zero problem. If you really want to get good at it, watch this. Open up your 13.2 and go to templates. And let's get everything off there. Let's get all the noise gone. And let's just have two triggers. Smalls are accelerating away from the large. The large are wide. They're angled in the direction of the trend. Guys, every time I have this look on a 13.2 and I circle the tail, this is a potential entry. Give me a Y in the room if you see it, guys. Smalls, we're at the beginning of that acceleration, right? Over here, we're in the middle of that acceleration. Down here, we're in the middle, right? There's those tails. Once again, potential entries on a 5-1, on a smaller, faster chart. Guys, do you see how easy it is to recognize odds favorable momentum? And if you scroll back, what you're going to realize is that it doesn't happen every second of every day. Every trade, every moment, guys, odds favorable momentum isn't an eternal thing. What it is is it's a little bit of patience, right? Cal, what I did is I went right click and scrolled down to the templates, and then I hit load. And once you hit load, it's going to give you all these different options. You don't need all those options. 2 triggers only will help you focus just on that momentum. And then that 13.2 Rinko is going to put your fibs and your mid bands and your 1-to-1s back on the chart. See how we did that there? So guys, rule number 1 gives me the advantage of momentum. That momentum lets me know that the odds are favorable for the market to continue in the direction of the trend. Rule number 2 says, well, I can take a trade with the advantage of a clear path, but I have to make sure that there are no termination conditions present. What's a termination condition? Well, it's a Fibonacci-based indicator that may reverse the market. And we're going to do it just based on a comparison of those same trigger lines that give us momentum in the areas. What are the areas? Guys, the areas that may reverse the market. Magenta, divergence high. Good morning, Safia. Red, Fibonacci resistance. Yellow, 1-to-1s. It may be a cyan, divergence low, or blue Fibonacci support. And sometimes it can be a mid-band if those large triggers are a full bar away. So guys, these are your areas. These are your giant red flags that tell you we've reached an area where the market may reverse. And then what we can do, what you can do, is you can gauge whether or not they're likely to stop the market or not on a simple comparison. And that comparison is with the area and the trigger lines. Price reaches an area. That's the key. That's the first part. Price makes it to the area. When price reaches this Fibonacci support, check your trigger lines. If none are below this area of support, guys, no more trades on that 5-1 chart. No trend trades into an area that may stop the market. Everybody comfortable with that? Price reaches, no triggers through, no trade into the area because you've given away the advantage of a clear path. This is rule number 2 for a high probability trend trade. Most of you are going to understand this look today. A lot of you are going to fight this look just like I did, and that's okay. You're going to learn to respect it. Price reaches resistance, the trigger lines don't break through. This becomes an area likely to stop the market, and I'm no longer looking for long trades. Price pulls all the way back to the mid-band, all the way back to that support. None of the trigger lines are even near it. This is an area likely to stop the market, guys. No short trades. 90% of what you do during the day is going to be chart reading. 90% of what you do is going to be waiting for those advantages to be present so that you can enter the market. Price retraces all the way back up to resistance, a magenta high, that divergence line, and a second resistance. This is what we call a pivot stop out. This pivot, where the market went up and down, has divergence. That divergence creates a magenta line all the way across your screen. When price exceeds and then trades back below, don't take any more long trades into that area, guys. This is an area likely to stop the market. This becomes a very powerful termination condition when it happens at Fibonacci resistance or support. And this termination condition, which creates a full reversal, ultimately gives me odds favorable momentum. Guys, this is your best of the best look for a high probability trend trade. This is what we call a strong top. You'll see the same thing from a low. Price reaches an area of support. Absolutely none of your trigger lines break through that area. We know this to be a termination condition, right, guys? No more short trades into this area because it's likely to stop the market. We want that advantage of a clear path. And thank goodness Rule 2 is in place, because look at what happens. Surely there was a loser to be had there if you don't respect. This termination condition creates a full reversal. This full reversal gives me odds favorable momentum. This odds favorable momentum, guys, there's that tail, there's that circle. This is your best of the best. A 5-1 trend trade that happens after a termination condition has the most likely chance of success. That's a trade that typically wins 70 to 80% of the time. I can identify where the market is likely to stop. I can use Fibonacci to identify where the market is likely to go. And guys, I can use rule number 3 to identify where that market is likely to continue. And we're going to talk about that. But first, I want you to see this, guys. Sometimes the market kind of pivots from nowhere. Everything is down. The areas are broken. Everything is up. I have odds favorable momentum. This next termination condition you're going to see on a smaller, faster chart. This is the only, write it down on a piece of paper, this is the only termination condition that I'm looking for on a 5-1 chart. And it's 3 divergences in the same price range. And 3 divergences means that there has been a loss of momentum 3 times. Every time this negative number prints, every time the cyan line from a low or this magenta line from a high prints, it means that momentum is not following price. We're losing momentum in the direction. When it happens 3 times, it may terminate a trend. It becomes even more powerful when those trigger lines go from odds favorable to anything can happen. Visually, we're seeing this slowdown on a smaller, faster chart quicker than we'll see it on a large, broad stroke of a brush. It becomes even more powerful when that third divergence pivot is higher than the previous from a low or lower than the previous from a high. So when I have this look at a low or this look at a high, guys, what it's doing is it's helping me identify these potential changes on a 13-2 chart. And that's the only termination condition that I will use on a smaller, faster chart. And those same termination conditions are going to help me manage trades as I move out of the high probability into medium probability trades. Is everybody comfortable so far? Rule number 1 says odds favorable momentum, right? Small's below the large are wide, angled in the direction of the trend. Guys, the odds are favorable for the market to continue in the direction of the trade. Same thing going the other way, right? Smalls are above the large are wide, they're angled in the direction of the trend. The market is likely. If divergences are ascending or descending, is that a confirmation of a trend? Sign a loss of momentum? Gary, every divergence is a potential loss of momentum. And remember that there's no guarantees, right? 3 divergences may not stop the market, but what it tells you is that you've given away the advantage of momentum. 3 times in a row, that market has said that the momentum can't keep up with the price. Sometimes in a strong trending day, you may have 15 of these, but you're giving away your advantage. And what we're looking for is trading with advantages every time. Not willfully giving up a clear path, not willfully giving up the advantage of momentum, because the reality is, guys, the more advantages you have, the more likely you are to win. We've identified termination conditions, right? We've committed to not trade into them to give ourselves the advantage of a clear path. We've identified the momentum, giving ourselves the momentum, that odds favorable. And this is going to be the look of your 5-1, guys, that smaller, faster chart when the rules are met. In an uptrend with rules 1 and 2 met, you're going to see an awful lot of up bars. You're going to see trigger lines strong in the direction of the trend, preferably overlapping one another. And all you're doing right now is you're making the decision, because rules 1 and 2 are met, I'm going to look for an entry. And you're going to focus your attention on the 5-1 large triggers. They should be up and strong. And you're going to look for the areas that may fall within them. Fibs, mid-bands, and 1-to-1s. Guys, there are 3 spots where your trades will originate. Fibs, mid-bands, and 1-to-1s. Every high probability trend trade trades from an area. It's a key point. Why? Because these areas act as backstops. These areas are like throwing a tennis ball up against a wall. And these key Fibonacci areas give the market an area where it's likely to continue. Rule number 3 says that we are going to buy a pullback. And a pullback is a small retracement in price counter to the underlying trend. Let me show you an example. The market is in a downtrend. This is your pullback, a small retracement in price counter to the underlying trend. Does that make sense, everybody? If the market is going down, Our rules say we want it to go up. And if the market is going up, our rules say we want it to push down. And when we get this reversal bar that signals the beginning of the pullback, I'm going to focus on my entry areas. I'm going to create a window of opportunity. And that window of opportunity will extend from the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. And guys, I can identify this window as the area where the market is most likely to continue. This is where we're going to enter the market. I'm going to right click, and right at the top of that window, I'm going to activate my limit order, and I'm going to patiently wait for the market to come down to me. Guys, give me a Y if you're with me. Everything says up. I want to see a reversal bar. When I see the reversal bar, I create my window of opportunity, and my job is to activate a limit order at the top of that window, because this is where the market is most likely to continue. And my initial stop, my protective stop, is going to go below that window where the market shouldn't go. If the market exceeds this window, comes below those large triggers, guys, I don't want to be in the trade anymore. Here's your math quiz. If I take 100 trades and I win 70 to 80% of them, guys, how many trades probably aren't going to work out, even if they fit the rules perfectly? What do you think, math wizards? 20 to 30, right? 20 to 30 of 100 of my trades just aren't going to work. This is a methodology that gives you a statistical advantage because it's been proven to win more than it loses. So we identify outside of that window of opportunity where a protective stop can go when we no longer have the advantages, so that we're not giving away all of our money hoping. Guys, you're too good for that. You've identified momentum through trigger lines. You've identified a clear path, and you were able to identify where the market is likely to continue and take that trade right there at 79.21. And now all you have to do is build trust. Trust that when you follow the rules, trust that when you follow that high probability trend trade checklist, that you have a trade that wins 70 to 80% of the time typically, that you have a statistical advantage, that you've given yourself the best chance of success. Guys, this is a checklist. This is a high probability trend trade checklist. And I've stolen pictures out of the resource materials, out of the manuals, of what each looks like, broken down by the rule, broken down by the conditions. I'm going to give you this checklist right now in the room. Download it, save it to your computer. I'm also going to give you the exact same checklist without the pictures. In this checklist without the pictures, I want you to print it out. I want you to put it on your desktop, and I want you to begin the process of policing yourself. Every time that you think you see a trade, I want you to go through this checklist in your head. Well, do I have odds favorable momentum? Do I have no termination conditions? Do I have an area for entry inside of favorable large triggers? And what you're going to find is that if you can truthfully answer yes to this checklist, you've given yourself a trade that typically wins 70 to 80% of the time. 70 to 80% of the time, profit target reached. Give me a Y in the room if you're with me, guys. Odds favorable momentum, no termination conditions. And then, guys, here's the best right here. This is your favorable large triggers. The best of the best look is when those large triggers are one right on top of the other, large and synthetic. Why? Guys, because when those trigger lines are one on top of the other, doesn't it stand to reason that your window of opportunity is forced to be smaller? It's forced to be more concise. We can reduce risk. Pretty cool, right? Here's another one. I'm going to share some pictures, guys. Steal these. We're going to wait for the reversal bar. At the time of the reversal bar, we're going to identify the large triggers and then look for areas within. Do you see how small that window of opportunity is right below the midband? It's the only area that I have inside of these favorable large triggers. A limit order right below, it gets filled and ultimately continues with the trend. Do you guys want to go find an entry? Let's do one together. Let's go to today's market. We've already identified Odds favorable momentum, right? Let's see what this circle did right here at 907. And guys, this is your study tool. Remember we said that we're going to circle the tails? And if those tails line up with an area of support inside of favorable large triggers, well, then we know that we have a rules-based trade, right? So how do we find that entry? Well, the first thing we do is we take our cheaters off. You don't get the circle for this. And we're going to start on the 13.2, guys. And you know what? Let's get rid of all the noise, because all we're focusing on is entries right now, right? We're looking to find that area where the market is likely to continue. So I'm going to spread my 13.2 way out, and let's just exaggerate that best of the best look. Can we all agree that the smaller above the larger wide, they're angled in the direction of the trend? And more importantly, we haven't reached an area where the market is likely to stop. Guys, new users, give me a Y in the room if you see it. Isn't that beautiful? The odds are favorable for the market to continue in the direction of the trend, and there's absolutely nothing in the way. And guys, this is what my 5-1 is going to look like. Things are going to be going up. That market's going to be moving up. And I'm going to start looking, where are my areas? There's areas everywhere, right? I've got resistance turning into support. I've got a mid-band. But the key is to wait for what? What are we waiting for, guys? To build that window of opportunity. The market's going up on both charts. The triggers are going up on both charts. Everything says up, and I'm beginning to worry that I'm not going to get paid, right? Oh my gosh. And then I get a reversal bar. Perfect. When I get this reversal bar, I'm going to identify the top of my triggers to the bottom of my triggers. And I'm going to identify my highest point of support to my lowest point of support. And I'm going to create a window of opportunity. Is everybody with me on this so far? I'm going to create where the market is likely to continue. And guys, this is just a drawing tool, not a real limit order. I'm going to put a limit order at the top of that window. And I'm going to sit on my hands. And I'm going to see if I get filled. And sure enough, I did. The market pulls right back to that window. Right back to that window of opportunity with odds favorable momentum. Right back to that window of opportunity with no termination conditions. My initial risk, remember, is down here where the market shouldn't go below that window. Once I get this reversal bar, I can minimize my risk. And if I'm in at 76.57, this market doesn't blink for 15 ticks. But now I'm starting to see multiple divergences, right? There's two of them. Market comes down, bounces right from the window again. And then that third divergence in the same location. Does everybody remember this as a potential termination condition? The market may reverse when you get three divergences in the same location. The market may reverse even more so if those small triggers are inside. I want you to see something. If you were in here, doesn't that give you an opportunity through chart reading to exit the trade with a zero loss? Doesn't that give you an opportunity to exit the trade before it goes against you? Because you can read on the smaller chart, which you're not yet seeing on the larger chart. It's another way we can use those three divergences. And look what happens after the third divergence, guys. Not only will we use this to keep us out of a potential trade that doesn't have that clear path, you'll be able, as you grow with the software, to recognize it and to be able to take advantage of it to manage out of a trade, to preserve profits. That makes sense, guys? Sometimes that bar by bar makes it a little easier. You get to see it get to work on it, get to practice it. You know that you can practice this, right? Go back and circle these. Smalls smashing through the area, larger above. Let's see what that circle did. Did it pull back to an area of resistance inside of favorable large triggers? Wow, that was at 6 a.m. There's one that everybody caught. Did you guys see everybody posting the picture in the room of this one? Odds favorable. Let me give you an exploded view. The market hadn't yet reached that key area. The market hadn't yet reached resistance. Strong trigger lines, small window of opportunity, beautiful opportunity to continue up. I know a lot of you made money on that one this morning. Nice work. If you didn't make money on it this morning, guys, if you stick to this plan, you're going to have the opportunity, probably by the end of the week, early next week. Odds favorable, everything says down. Guys, look at this one. Price reach support. The trigger lines haven't broken through yet, right? That's not a trade. That doesn't have a clear path. Let's get rid of that circle. Here, the smalls have broken through with aggression, right? We have odds favorable. Pulls right back to resistance inside of favorable large triggers. And sure enough, this market continues down. There's a third divergence in the same location. And that's what starts the uptrend. Everybody comfortable so far? Let's look at the live market. Give me a Y or an N in the room, guys. Do I have odds favorable momentum? Mohammed, you say yes? So let's go back. And guys, it's okay, because if I'm not sure, you know what I can do? I can always go back to the instructions. Odds favorable in an uptrend, Mohammed, means that my small triggers are outside of my large triggers. It means that there's space created between both the small and the large. And this is my best of the best look until they return and they work their way inside. When they work their way inside, it's called a weakening of the large triggers. Well, a lot's happened since we looked back at the instructions, but do you see how they were weak, Mohammed? Not that odds favorable momentum. If you look over here on my 5-1, they're also weak. I'm also seeing a loss of momentum. So guys, if I tried to go long, if I said, you know what, I hope it works and I'm going to go long right here at support inside of favorable large triggers, what advantage did I willfully and knowingly go away if I traded with weak triggers? What do you suppose? I've given away the advantage of momentum. And what you're going to do is you're going to begin thinking in these terms, guys. Price reaches resistance, absolutely no trigger lines break through that area. If I take a long trade into this area, I have willfully given away the advantage of a clear path. Are you guys comfortable with that? And then finally, if I take an entry that's not in an area inside of favorable large triggers, well, I've given away the advantage of where the market is most likely to continue. And when you piece these together, you put yourself in a position for success right off the bat. These become looks that are easily identifiable in the first week. These are looks that build the ability to read your charts, to put you on the path of success, to give you something super focused to work on so that you can continue to grow. I'm going to give you guys this one in the room in just a second, but this is an example of how to write a plan to stay focused for that first 20 trading days, to put yourself in a position to give yourself that clarity so that you can take one trade that wins more than it loses while you continue to grow with the software. And that's defining the entry point on that high probability trend trade, guys. The checklist is right here. Use the phrase, my trade is. My trade is the high probability trend trade. And commit yourself. In order to take this trade, the rules must be met. The conditions of this checklist must be met. I must have odds favorable momentum. I must have no termination conditions, and I must have an area inside A favorable large triggers. Commit to it. This is a trade that's been proven to typically win 70 to 80% of the time. The next part is you have to take pictures, guys. Take pictures of everything you see. Take pictures of your perfect trades. Take pictures of the wrong trades and annotate them, the wrong trades. Take pictures of termination conditions. Take pictures of not having rules met. Take pictures before the trade, after the trade. Study, steal, grab them from the manual. But for your first 20 trading days, guys, the more pictures you take, the quicker you're going to get to where you want to be. The more you annotate charts, the quicker you're going to get to where you want to be. Whoops. And when I'm annotating charts, I'm going to give you this picture. Every time you take a picture, write your rules right on that chart. Every time you take a picture, use that checklist. Make sure, police yourself that you're following those rules. Present that chart in class, and let's talk about everything you do. Guys, for 15 hours a week, my sole purpose in life is to give you feedback on anything and everything that you do. It's up to you to take advantage of it. As you learn to read your indicators, as you learn to read your charts, guys, and you're taking this best of the best entry, let management work itself out. Keep it mechanical. Keep it very focused, methodical. Nothing to do with chart reading, nothing to do with opinion. And if you allow this to be your path for the first 20 trading days, you're going to understand how to read your charts, and you're going to understand fluently where the market is likely to continue, where it's likely to stop, and where it's likely to go. And the idea is to build this foundation that puts you in a position to be capable of making money early on so that you can continue to grow, continue to read your indicators, and expand from that foundation to get the most out of the software. So guys, my plea for you, if you're brand new, let it be simple, let it be focused, allow yourself to be a student, and get the absolute most out of the software as quickly as you possibly can, and then grow from that point. Everybody comfortable with that? And I just put that example trading plan in the room. I put the example. Guys, I put this one in there for you as well. This was my weekend study. One thing you may not know about Nexgen is John and I spend countless hours talking about how to make things better for you guys. This is everything that I just talked about in one document. Taking pictures, posting in class, outline for education. Guys, here's that checklist, how to annotate your charts, using the spreadsheet to get the absolute most out of it. I've even got pictures of that very mechanical management plan. And then it goes in to discuss the Apex trading. If you have questions about Apex, you can always ask. But this basically says when you're ready to go and get into the market and trade live, guys, there's opportunities to use other people's money. Feel free to ask. Paul, Ziba had a little technical difficulty. It wasn't allowing it to load. I've had that happen a couple times too. Sometimes it's not giving up that market. Yeah, I know, right? It wasn't a Jason issue. It was a NinjaTrader issue. I love it because Ziba went in and knocked out those instructions perfectly. But that darn NinjaTrader wasn't giving up the data yesterday. So new users, this is the first part of class. We're going to go through rules, right? We're going to talk about what we see. Small's below the large are wide, they're angled in the direction of the trend. Does everybody see this? I haven't reached an area. So since rules 1 and 2 are met, guys, can't we draw that rectangle from the top of the triggers to the bottom of the triggers? And then whittle it down to that area that may be inside of those large triggers. These 1-to-1s might make it if I get a reversal bar. And simply right-click, right? And wait with a limit order below that lowest point of resistance, because that's the area where the market is most likely to continue. When I have the advantage of momentum, when I have the advantage of no termination conditions, And if I get that pullback, do you see how quickly I did that? Even before the pullback, before the reversal bar, I know exactly where this market is likely to continue. Give me a Y in the room if you see it. Guys, this is a live example of what you're going to practice every day. So what happens if price reaches support and no trigger lines break through? Well, I should probably cancel this, right? Because I've given up the advantage of a clear path. Rinse and repeat, guys. We're going to do this every day until you're so comfortable with it you can't stand yourself. Did we have news at 10 a.m. today? Do you guys remember? I believe we did. Wednesday, March 1st, 10 a.m. High impact, ISM manufacturing. We're 7 minutes away from high impact news. Here's your S&P. Small's above the large are wide. They're angled in the direction of the trend. Guys, this is an area. Is this area completely broken? Small triggers are through, but the large triggers are not. This is an area with the potential to break, right? Because of the odds favorable momentum. But my trigger lines aren't both to the other side. I don't have the complete advantage of a clear path, which means that this entry at an area inside of favorable large triggers, guys, well, this becomes a medium probability trade. This becomes a trade with the potential to win on this area that may break, but I have to manage it assertively. If something changes, if I begin to get multiple losses of momentum, I'll be able to use that chart reading to manage out of this medium probability trade. I'm going to leave you guys with the market as we come into news. When I come back, I'm going to start looking at the pictures that you've posted in the room. We're going to talk about what you see. We're going to talk about the advantages that you had, maybe some advantages that you gave away, and we're going to continue to work together to get you exactly where you want to be. Guys, I'll be back in just a minute. Remember, news in 6 minutes. News is coming out in just a minute. I'm scrolling to the top of my chat box, and I'm going to start looking at some pictures that you guys posted. We're going to take a look at some trades that have been taken by Nexgen users. This one's from Gary. Strong triggers. Hadn't quite reached the area. Everything says up with momentum, nothing in the way. Picture perfect entry at an area of support inside of favorable large triggers. He says he's already halfway to his daily goal on his first trade of the day. Joel, not to be outdone, says, well, if Gary can do it, so can I. Picture perfect entry, odds favorable momentum, nothing in the way. Guys, this is your recipe. This is it on its most basic form, right? Bobby T coming through in cahoots with the other guys. Says when I have that odds favorable momentum and I have no termination conditions, it hasn't quite reached that area of resistance. Bobby T got a little jumpy, right? Waiting for the pullback. It didn't quite get his area here. Looks like he might have taken two. One entry up top, the nervous entry. One entry at support, the perfect entry. Profits all the way up to the fib. Nice job, Bobby T. Great trade. Guys, this is what we're going to do all day long, right? We're going to talk about what we see. Smalls below, large above. Everything says go. Gary's adding a second chart just to add some confusion. A 13-2 read says losing momentum. Losing momentum. Guys, I want to remind you too that just because somebody else posts a chart doesn't mean that you can't learn from it. So if you have a question about something that you're seeing, feel free to post up in the room. Well, why did he get in? What rule was met? I want to remind you guys though that as I go through and grab your pictures, I have to scroll way up to the top of my chat box. And what that means is that I can't see the comments in the moment. If I miss something, let me know. I don't want to miss out on anything. And I want to make sure you guys get everything that you need. Scrolling through, let's see what we have. Here's one from Paul this morning. Let's see, Paul. Paul says he has odds favorable. The market's beginning to move up, and he's got 1, 2, 3 divergence. He gets in on the second. This is the same one that we spoke about, right? Picture perfect entry. Low risk. He's able to make money. When he gets that third divergence, he takes an exit because he knows that the market may push down lower. Says, looks like I could have maybe had one more, but moved really fast, was a third divergence. Didn't pull the trigger in the moment. I think that's great. That's following rules, right? Following rules, a pragmatic approach. Paul, great trading. Nice start to the day. Gary, same look, right? Ultimately, those three divergences, say don't mess with it. Could have definitely had one over here that you had to manage out of. But where you're pointing out, absolutely, no trade to be had. Guys, one of the things that you're going to recognize, one of the things that you need to remember is that all you're focused on is catching those best of the best entries, right? All you're focused on is making sure that you can get into the market at the correct spot because it becomes manageable. Getting into the market at the correct spot means that you're reducing risk. It means that you're maximizing your profit potential. I'm going to use Paul's trade as an example here, if I can find it. Because Paul waited for that area of support inside of favorable large triggers, when that reversal bar prints, he's got virtually no risk on a trade. Jumping in early only creates more risk, less profit potential. Beautiful entries make for manageable trades. Smalls inside the large, rules not met. Gary saying, I'm going to insist on my rules being met because they provide me an advantage. Nice job, Gary. Paul, smalls above the large are wide. They're angled in the direction of the trend. Picture perfect. Pull back to an area of support inside of favorable large triggers. And this one didn't work. Two things. Paul, thank you for sharing a loser. Do losers happen, guys? Did anyone lie to you when you came up with the software that said that you're going to win 100%, right? 70 to 80% of the time, this is a look that hits its target. This is one of the times it didn't. Your job is to develop so much trust in the software that you take that setup the next time it presents itself. Nice trade, Paul. I would take that trade every time, and I would take that loser every time because it fits my rules 100%. All right, Christina, you said that you took this trade yesterday. You realized that you entered too early. Your entry doesn't show on, but it was basically before. When everything's set up, I'm guessing that you cleared the spots. Thought process, odds favorable momentum. Termination condition didn't scare you off. Thought the bottom indicated we would be heading for a long trade. All right, so you're saying a great termination condition, creating a full reversal, giving you odds favorable momentum. You feel good about it. Feel confident about the direction, but watching the 5-1 was a bit stressful. Ride with the divergences downwards. Going back to the 13-2, looking at the green background, and was watching this happen was fun. Exited the trade, then was content with the earnings far enough away from the red resistance termination. I love it. Christina, good bottom, strong momentum. I can't see your entry, and it may have been just a little bit early. Absolutely beautiful, Christina. That's okay. What you're going to realize, right? What you're going to realize is that when you have momentum, you have direction, you have a clear path, every chart is the same color and screaming in the same direction. Guys, it becomes effortless, ultimately. It really does. It gets to a point to where it just becomes easy. And Christina, I believe I took the same trade yesterday. Nope, that's not at a time that I took a trade. I took one with a very similar look, though. Nice job. Welcome to Nexgen, Christina. First week and you're already trading with momentum, trading with direction. You're already identifying potential spots to get out. I love it. All right, Cal, you circled this one. Cal, are you with me? Can you hear me? Awesome. So I'm going to do, and I had an English Lit professor in college that anytime you wrote something on a piece of paper, he would say, "So what?" It aggravated me so much. Cal, why did you circle this? Is this the picture? Oh, this is the picture that we weren't synced up. That's the so what. Perfect. I want you to do me a favor, Cal, from now on. And not this picture doesn't count because I know exactly what this one was for. When you take that picture, guys, get in the habit of using that call out. Tell me what you see. Tell me why you see it. Tell me what's happening in your world there. And Cal, yours was, we were looking for the most current bar. If you get in the habit on day one of typing on that chart, telling me what you see, asking me the questions like that, guys, you're going to get to where you want to be faster, I promise. Annotating charts reinforces your rules. Annotating charts has you verbally identifying things, and that helps it stick in your brain. Jose, beautiful. Jose trades, this is a beautiful trade, isn't it? This is odds favorable momentum, and this is no termination conditions, perfect identification. This is an area of support inside of favorable large triggers. You got in early, and it just didn't work, right? You had every advantage and you followed the rules for a trade that typically wins 70 to 80% of the time. And it just didn't work. That's 2 of you that I've seen take this same trade. Guys, I was hoping to see 20 of you take this same trade because it fits the rules 100%. It offers you the highest chance of success. It just didn't work this time. This is a cost of doing business. Great trades. Tim, let's see what you got, my friend. Tim, it's a tough trade. And guys, this is where your rules on the chart help me a lot. I'll tell you guys what I see. And I want to remind you guys that everybody's going to have a different approach to what they do. Everybody's going to have a different comfort level. Everybody's going to have a different way that they're going to take advantage of the Nexgen software. Tim noticed that the large triggers didn't exceed resistance. And Tim, if I'm not mistaken, you probably said, well, this was probably a little bit of overrun. The triggers roll from resistance, the small gets strong below, and Tim's saying, man, that's some momentum to the downside coming from a fib. My large triggers rolled. Tim, this is the only big challenge for me right here. You let it close the gap to the large triggers. I think your entry at a potential first run down is amazing. Beautiful chart reading. You knew that these triggers at that mid band down here was a trouble spot. You took quick profits. You're trading with direction. You're trading with momentum. And because you're trading into an area likely to stop the market, you didn't sit and hope. Guys, this is next level. This is taking chart reading and grabbing a small portion of a move, not being greedy. I love everything about this trade, Tim, but it's not a high probability trend trade. New users, this is where you go when you focus on the high probability trend trades. You put yourself in the position to be able to read those indicators on the fly. The world is your oyster. There's nothing you won't be able to accomplish. Paul, that's the one that ran you over. Came all the way down to the mid band. You were emotional about getting in here, but the larger still lifeless, and you're just going to wait. You're going to wait for the best of the best, right? All right, Paul, are you with me or are you in a trade? I want to talk about something. And this is kind of a cool look, right? So, Paul, everything said we were going up, right? This thing was flying. Everything said, man, this is the trade. It just wanted to push back, and it comes to that mid band. It comes to support. The gap theory fills itself, right? You know this one, the slingshot. If the large triggers don't follow, it's likely to come back through. Your 5-1 chart gives you all this nonsense, right? All these shenanigans in the middle, letting those people do what they're going to do. And then you get to a point where everything goes green again. And Paul, there's that tiny little stab back continuation style. Do you see it? Right back just about to the mid band. This one may not have gotten you. Look at the price. It's almost exactly the same, isn't it? The market wanted to do all this silliness, right? It wanted to push down. We don't control that. But when all the triggers turn green again, the small triggers are up, you let it work itself out. Paul, that was one of those continuation looks. And it was supported by the 13.2 because you had that momentum of the smalls breaking above the large right at the beginning. Does that make sense, Paul? Awesome. Just a little chart reading. I know that we've talked about this one, so I want to keep adding it in there. Guys, sometimes trades don't win. Sometimes those trades that don't win give you another opportunity at darn near the same price. Great picture. Let's see where I'm at. That was Paul. And you say, now it's going the other way. And there you go, Paul. Now you have anything can happen triggers with a divergence on a 50-50. Yesterday, emotional Paul gets in at the top of the window. with the divergence. Calculated Paul gets in at the bottom of the window. Takes some really quick profits there, $100, nothing to lose. Beautiful trade, Paul. Great patience. Beautiful entries create manageable trades, right? All right, new trader. New trader, I don't know why, but your pictures are always tiny. Rules 1 and 2 met. Limited order at the top of the window. New trader, can I ask, are you in here? And maybe it looked different in the moment. I always like to give you guys the benefit of the doubt. New trader, it looks to me on this bar that price, did the small triggers already break above? Because over here it looks like price stopped pretty suddenly. The small triggers were above. And we just didn't make the mid-band, right? We didn't quite get those areas of support. I like it. Momentum, direction, everything. Smalls break through the area. It just didn't get you back here. This is one that you probably wouldn't have been able to get into. Do you see it? Yeah. And new trader, can I ask you, are you trading or are you just circling right now? Just going through the process? Are you simulating? Are you putting those limit orders in, trying to get filled? Cool. New trader, use that simulator. Take these trades. Your analysis is getting better every day. Take these trades. Use that simulator. See what it feels like to get in. You're doing a great job with your analysis. You're doing awesome. Keep doing. The more you take trades on simulator, the more you present them in class, the quicker you're going to get to where you want to be. Christina, here's your style that you appear to be adopting. In after trouble, out at trouble, in after trouble, out at trouble, and it all revolves around momentum and a clear path. That's okay. New trader, mess it up and let's talk about it, right? Christina, enjoy your day. I appreciate you being here. I hope to see a lot of you in the future. Good. You're doing great. Keep doing. Keep practicing. Take pictures. Post them in the room. We're going to get it. Everybody's going to get to where they want to be. One of my favorite things is watching you guys grow with the software. So keep growing, guys. New trader, is there something specific about management that I can help you with? With the stops, with the targets? Do you want to go through one and see if we'll just do it together? Cool. Let me get through these pictures and then we'll do that. We'll talk about stops and targets, guys. That's what the room's for, isn't it? If you don't know something, let's work on it. Gary, let's see what you got. Loss of momentum on a 50-50. Perfect entry, but you gave away the advantage of momentum. Not quite a clear path. Medium probability trade just didn't work out. It's a great effort at it, though. I like what you did. Ziba, let's see what you're doing. Ziba, same thing, right? Odds favorable momentum. Yep, you're at the tail end of it. Clear path. You say yes before you entered, but a few seconds later, the resistance bar showed up and messed up everything. All right, Ziba. Are you with me in here? No, it's not terrible. But let's talk through it again and let's do a little honesty and annotation, okay? Guys, you're going to see what you see in the moment, and sometimes you'll have a little more clarity when the emotion is over, right? Gary, very astute. All right, Ziba. So that big red line that showed up and messed up everything, it's the same big red line that had been there for quite a while. Do you see that? It didn't sneak up on you. It's been there. Do you recognize it? So you did have momentum. But the one thing that you didn't have, Ziba, is you didn't have a clear path. And that clear path didn't suddenly close on you when you took the trade. That clear path was gone for almost 3 bars on the 13.2. That clear path was gone all the way back here. And that's okay. You entered the long trade, right? We just made a mistake. I hope you keep making mistakes. Where was your entry point supposed to be, Ziba? Down here, right? At the mid-band inside of favorable? Not in the middle? Do you see rule number 3? You're doing awesome. And guys, everything about this, learning to day trade's like a cha-cha. You're going to take 2 steps forward, 1 step back. So you got in a little earlier. And since you bought the market, right? These sells, these are targets. These are the opposite of the buy. The buy gets you in, so sells have to get you out. This is your stop, sell stop 2. This is your target, sell target 1, sell target 2. Does that make sense, Ziba? Do you know what the most common broken rule for new users is? It's not realizing that they traded into a termination condition until they just traded into a termination condition. And that's why we study every day. Your triggers were up, right? Your direction was up. Absolutely. So Ziba, if I buy the market, if I'm long, let's make these bigger so that you can read them. You're comfortable with buying the market, right? Okay, it means up. If I sell the market, I'm short. It means I want it to go down, right? If I buy to enter, I have to sell to exit. If I sell to enter, I have to buy to exit. So this is what we're doing. So when you enter a trade, Ziba, and you buy the market, you bought 2 contracts. In order to exit your position, you have to do the opposite. You have to sell. And that's why your targets show sell, sell. It doesn't mean that you want to go down. It doesn't mean that you're trying to take a short trade, Ziba. What it means is it's the opposite of the buy that got you in, and this will get you into what we call a flat position. No open positions. Does that make sense? This confused the ever-loving heck out of me. And I can't tell you how many times I asked my brother, well, how am I supposed to sell something that I don't own? He's like, it's futures, Mark. You've just got to work with that. So your targets and your stops will be the opposite of what you did to get into the market. That's a great question. Because that's confusing, because if I see sell, I think that I'm going to be going short right there, right? When in reality, I'm canceling out. I think that's an awesome question. Thank you for that one, Ziba. That's probably clarity for a lot of other people. Remember to give yourself that clear path, right? You're doing great. Guys, trading with direction and momentum is an amazing way to give yourself just overwhelming advantages. All right, let's see what Paul did. Whoops, Paul says, I made that too big, didn't I? 50-50, right? Odds favorable, area with the potential to break but has not broken. Divergence prints. Paul says either from the best spot or not at all. I like it. And then Paul, this goes back to pivot from nowhere. And this is what Gary was talking about. When that market pivots from well below the areas, that mid-band and the resistance around it is more likely to hold because it's a continuation point, right? Gary, I think you nailed it. The difference, and this is just chart reading, right? This is that nuance. Pivot not from an area. Let's go to the live market and see what happens. A lot. Pivot not from an area, pulls right back up to resistance, continues down. Pivot from beyond the area, pulls up to that resistance. They fight a little bit, ultimately continues down to the next key area. This is a pattern that you can recognize a lot, guys. When it comes from a key area, the likelihood of it going the other direction is more. A little bit of chart reading there. And I'm not sure how that turned out. But guys, those big traders love Fibonacci just as much as you do. All right, D, let's see what you did. D's checklist, coming from a good top or bottom. So D, we're not, right? It's not a termination condition that created a full reversal. This is just a pivot from beyond the areas. Are you with me in here, D? And guys, this is a question for everybody. When it comes from an area and creates a full reversal, we call it a strong bottom. When it comes from kind of the middle of nowhere, it's not a strong bottom. This is just a pivot that's creating a reversal. Does that make sense? Awesome. You do have odds favorable, right? And then we have an area with the potential to break but hasn't yet broken. Are you comfortable with that look? The smalls are above, the large are not. Awesome. So let's go look at your entry. You take the entry at the area of support inside of favorable large triggers, and it just doesn't work out. This is a 50-50 trade, and I think that it's that strong bottom, it's that little understanding of the strong bottom, D, that changes the whole dynamic, doesn't it? Because that was one of your conditions, and I agree with you. A 50-50 trade from a really strong bottom, man, I love that look so much. So this is great, great picture, awesome annotation, because it helped us clear up something instantly. Nice job, D. Coming from a strong bottom all day long, I love that trade, especially without divergence. Great trade. Great execution, great read. Just one little bit. I love it when there's one little bit, guys. That's job security for me. Thank you. All right, new trader. Termination condition. Full reversal. Odds favorable. Pull back to resistance inside of favorable large triggers. I love it, new trader. Great read. The advantage of a strong top. The advantage of momentum. Gary, 50-50. Your entry is way above, isn't it? You waited for confirmation. Man, that's a lot going away. That's tough. That is 3 points of confirmation. And then you were break even coming into the trouble spot, which I like, and able to make a little bit of money, Gary. Nice execution. That confirmation cost you a lot. There's a point where I just say, you know what? That confirmation's too much. It's not worth it to me. 3 points on 4 contracts isn't worth it on an area that has the potential. There's that odds favorable momentum, 50-50 style trade. Perfect entry. First target, lower divergence, taking profit. Oh, you moved stop to break even. And then when it went back up, Dave B, are you ready for a little lesson? A little chart reading lesson? This pivot stop out right here, divergence, and then this pivot forms, and the small triggers are below, and it is a 50-50. That's a good look that it's probably going to push down just a little bit. This divergence line becomes your trouble spot. At this point, oh, it got you break even. Okay, no worries. I like that too. I think that's an appropriate stop. Had you held, and this is for everybody, when you see a pivot stop out like this and the smalls are below, it's probably going to push lower. So something to file away in the Rolodex, especially on a 50-50. I think you managed this one beautifully. You made money and you didn't lose money on an area with the potential to break. Is there anyone here that isn't here to make money? Guys, it's okay. When there's trouble, take the money. Wait for the next trade, right? There is nothing wrong with waiting for the next trade. The advantages start to go away. Don't hope. Earl, let's see what you did. Earl trading that 50-50 as well. Actually, Earl trading into termination conditions from a bad bottom. That is a picture-perfect termination condition into resistance with large triggers a long way away. It closes the gap to those large triggers right at support. I'm assuming your stop was back here, and you take money with the momentum. It's great execution as long as you understand that there was a termination condition present, which creates challenges. Pivot stop out, full reversal, odds favorable, directly into a termination conditions, right? And Earl, I know you've been here long enough. You're starting to recognize things in the moment, and you're making calculated decisions based on your chart reading. But because this is an educational class, I always feel compelled to point these things out because I want to make sure everybody sees what's going on. Awesome. Thank you for posting. And then I believe this was NG. Who is this? I distracted myself, didn't I? It happens. This was New Trader. New Trader. Termination condition, full throttle, right? Price reach, those trigger lines aren't anywhere near. Do you see it? Not a high probability trend trade. You are giving away the advantage of a clear path. And I think that it's important to remember, don't give away those advantages. If you do give away those advantages, manage it appropriately. But your triggers are split, your synthetics are flat. You're coming straight from areas that might hold. Just a little early. Just a little early. You gave away the advantage of a clear path. And one thing that happens is when these triggers are split like this, when you have a large trigger right here, you have a synthetic trigger split and above it, it's difficult to know which one of these trigger lines, because remember, we build a window of opportunity and our protective stop goes outside of the large triggers. So it's difficult to know when it looks like this, when it's coming from an area that may stop the market. And you can see that it already gave one huge bounce right off that area of support. I think that was 2 out of 3. Good read, without a doubt. Room to grow. Nice job, New Trader. All right, Ziba. Smalls below the large. I like it. No termination conditions. I like it. Ziba, your entry. Ah, so close. Are you with me, Ziba? Smalls below. No termination conditions. Beautiful, right? Ziba, this is your entry. Area of resistance inside of favorable large triggers. Do you see it? That was your entry right there. And then from 76, 72-ish, it made it about 10 ticks until we got that higher divergence that pushed it higher. I'm not sure what area you were trading to get in here. I see your targets, your stop is in place. And we answered this question, right? About the sells. Since you sold, buy takes you out. Okay. But that was your best of the best. And by the time you got in, things had kind of changed a little bit. Absolutely, Cal. I'm going to scroll down and grab a couple more of these charts, Cal, but I'm going to answer that question for you, I promise. Man, you guys are doing a great job posting today. A lot of great information happening. This is Safia. Safia says, the smalls broke through, the large didn't. Probability trade, divergence prints. And you say that you're willing to take it, and if divergence tells you to get out, we'll get out. Going into it pre-trade with a plan on how to manage it already, Safia, brilliant. Paul says it's slowing down a little bit. The smalls are still outside of the large. Didn't take that one, right? And Safia, I think that was your entry right there, higher divergence if you took it, and then it just never pumped the brakes. Didn't take, you got out because of the second higher divergence? I'll tell you what, to me that sounds like a very pragmatic approach. Didn't sound emotional at all, Safia. Nice job. And then Paul, you didn't take it because we had slow triggers at a termination. Not odds favorable at a 50-50. I love it. Guys, great patience. Way to stick to your plans and trade advantages rather than emotion. That's hard to do sometimes, isn't it? Joel, let's see what you did. Joel, that was probably your best. As the market comes down, we're 50-50 on a pivot stop out. We're a loss of momentum on a 50-50. Do you see it, Joel? You don't have an area inside of favorable large triggers. Joel, I think you just got tired of waiting there. Is everybody comfortable with the concept of a 50-50? Small triggers make it through an area, large triggers do not. Guys, this is an area with the potential to break, and sometimes it breaks and sometimes it doesn't, but that odds favorable momentum certainly increases the chances of it breaking. So Joel, just giving away a couple advantages there. And I want you to remember, you keep typing odds favorable on your 5-1. Let the 13-2 lead the way with that odds favorable on those 50-50s first. And then when you talk about odds favorable here, Joel, let me give you a picture. Because it's easy for us to say odds favorable, smalls outside. That's odds favorable. On a 5-1, yeah. It is hard to stay patient when you see you miss some because you want to make up for it. Joel, I think it's a great read. Smalls below the large. It had the potential to break. That's the one that seems to get you. Do you recognize it? There's nothing wrong with 50-50 trades, right? But if you're going to take that 50-50, gosh, let it be perfect. Isn't your money worth it? And missing beats losing. Let me see if I have that picture from yesterday that I took on 50-50s. And I want to share it again. And let me give you guys this one on 50-50 trades. Guys, this is not the gospel truth, but this is something that I found to be very helpful for new traders. When an area has the potential to break but it isn't broken, it's okay to absolutely positively demand that your 5-1 gives you the best. Gives you the absolute best of the best entry, right? No divergence, smalls well outside, tiny window of opportunity. Guys, this is hard to do because what does that mean? It means that you're not getting into a trade. It means that you have to sit still. It means that you have to wait for those advantages. Joel, this is an amazing picture and it's a phenomenal read. And now we're just going to shift the attention to making sure that your 5-1 is perfect when you read this one as well as you do. Sound like a plan? Insist on it. Write it in Sharpie on a piece of paper right in front of you. My money is worth a perfect entry on a 50-50 trade. Angela, nice to see you back in class. Angela, there's that loss of momentum. The smalls break through. The large have not. You take a perfect entry right in an area of resistance inside of favorable large triggers. Medium probability trade. Great entries. Create manageable trades. And you managed to make great money on that one. Nice trade, Angela. Same one. And then Sam User, exact same lesson, right? 50-50 medium probability. Man, it's okay to insist on it being perfect. You got in, your stop keeps you safe. And you make money, but do you recognize this as a look? Man, this thing could have pushed all the way up. It pushed up to resistance, and it looks like your stop was beyond this resistance. Nice job. But that is so far outside of my window. That's a lot of risk on a medium probability trade. All right, Paul, 50-50 from a pivot stop out. Tiny window of opportunity. Holding on to your profits for now. Paul, isn't this a termination condition that creates a full reversal? I love this look. However, because it's not coming from a fib, it's not the best of the best, right? It's a termination that creates a full reversal. It's a divergence low. Coming from a fib makes it a little more powerful for sure. But I try not to think about it too much, guys. I try to keep it very basic. A termination condition that creates a full reversal, I'm willing to call a strong bottom. I'm willing to call a good bottom. And then when you go 50-50 and you've got one spot where that market's likely to continue, does that make sense, Paul? Let's go to the instructions real quick and look at termination conditions. Let me know what you guys think. Just the pivot, right? Meh. Not a huge fan because it's just a pivot. But when it becomes a pivot stop out, right? Now I've got a termination condition. Now I've got a reason to believe that that market may be heading the other direction. Pretty cool, right? Just a pivot. Let's look at yours. Well, that just a pivot was way off to the left, but when it becomes a pivot stop out, it changes the dynamic. Great picture, Paul. Guys, I want you guys to notice just how much your posting in class drives this class. Your questions let me know what I'm talking about. Sam User, 50-50. You get in at the best area. Your stop keeps you safe. Quick profits. Lower divergence, so you get out break even. I love it. Nice job. Guys, you're doing amazing. Sam, 50-50. Right into a termination condition again, right? Do you see it, Sam? Remember when I said everybody has a pattern? Joel, I think you and I were talking about this morning. Everybody has a rule that they're willing to break, right? Everybody has a rule that for whatever reason, they've got the trend, they've got odds favorable momentum, and they can nail entries like they were born to do it. Some of us in the beginning don't identify termination conditions. And Sam, let's look at this on a couple levels. Price reaches resistance, absolutely none of the trigger lines break through. That's textbook, right? Isn't that everything that we use to define an area that we shouldn't trade into? No, it's okay. Guys, remember, it's not your bad. This is your growth opportunity. So Sam, we can take this one level further. I want you to see this too. Guys, when price accelerates away from these large triggers and reaches the Fibonacci area, here it reached the mid band as well as resistance. Sam, do you notice how those large triggers are more than a full bar away? Does everybody see this? Do you guys remember that one when we talk about termination conditions, when we talk about that gap theory? If price pulls away from the synthetic triggers too far and too fast into a Fibonacci area, it's going to snap back to the triggers more times than not. It's not guaranteed, is it? But more times than not, it's going to snap back to those triggers. So when price comes all the way to a mid-band, the large triggers remain a full bar away. I'm not looking for short trades in that vacuum. Price reaches resistance. Large triggers remain a full bar away. I'm not looking for triggers back in that vacuum. And this is something that you see over and over. And Sam, this looks a lot like what we just did today, right? Look at that. Divergence from a fib into resistance. Large triggers a full bar away. Patterns repeat themselves over and over. Sam, you can do whatever you want, right? I'm not here to tell you what to do or what not to do. But at 39.52, Sam, when price reaches those large triggers, do you have an area of support inside of favorable large triggers? Does this termination condition go away? Price is, and everything is still below resistance, right? So Sam, you can press buy all day long. Will you be following rules? You told me you're looking for a high probability trend trade. The rules aren't met, right? Guys, I got a great picture yesterday about the gap theory. And I know that sometimes people are looking for an opportunity to trade that gap theory, right? I had a picture sent to me yesterday. Let's see if I can open that. Talking about that gap theory. NG, you remember this one, right? Can I show you the after picture? So there's a recipe and there's some chart reading that goes in. There's advantages to be had and there's advantages to not be had. And I think that one of the best things that we do and one of the hardest things that we do as traders is to sit on our hands and just wait for the rules to be met, to just sit on our hands and wait for those advantages to present themselves. It's great chart reading, guys. And you're going to get better every day. No doubt in my mind. Each and every one of you is going to get better every day. You just have to remember that it's those basics, those foundations help us out an awful lot. All right, Paul, let's see what you got. It's at 50-50. We talked about that one. Gary, did we see yours? Small's above the large are wide. They're angled in the direction of the trend. There's a picture-perfect pullback to an area of support inside of favorable large triggers. You missed it, so you decided not to chase it. No worries. Textbook though, right? Guys, when you miss these, you make bad decisions on the 50-50s because you're trying to make up. That was beautiful. Yuri, strong bottom, termination condition. You take the pullback to the triggers. You're able to manage out of this one for quick profits, not getting greedy. HVA style trade. And then Sam User, this is the difference between 6 months experience and 16 days. As you grow with the software, you're going to see everything different. So if you focus on the best of the best initially, it helps you out a lot. There's that 50-50 divergence. You're close in. You're close. Paul, what did your market flow chart tell you? Reversal bar from divergence, triggers close, 50-50. Maybe a little bit of patience, right? Quick profit, no loss. I love the way you manage it. Managing like a boss. Steve B, let's see what you've got, my friend. Same trade. Smalls above the large, both up, directly into a termination condition, right? You take the entry right at the large triggers, right at support. It makes it manageable. Steve B, same conversation I had with Sam, though. You do recognize area of resistance. Every trigger line is below, right? Large triggers are a full bar away. Much lower probability trade. And Sam, it's the moment that gets us. And guys, that's one of the reasons why it's so important to take your pictures, to go back, to look at your charts after the adrenaline is gone, just to make sure. 3 divergences plus a mid-band. That's all right. And Steve B, just like I said, did you guys ever see, and maybe you did, maybe you didn't, I had to watch a video of it sent to me. There's an interview with Tom Brady. And the interview shows a rookie quarterback talking about how fast everything moves in the pros. And Tom Brady talking about how everything feels like slow motion. It's just repetition, right? But if you go back and watch the tape, if you go back and look at what you did when the emotion is gone, when the adrenaline is gone, when the indecision is gone, and you reanalyze the chart, guys, there's so much information to be had there. There is so much ability for you to grow as a trader from what has happened, from what you did do. Good bottom, full bar away. And look at this, guys. There's that gap theory. Look at the annotation in the moment. It's just repetitions, right? Well, you guys were looking for longs. Paul said it's too soon. Just different places. And then 3 divergences. He's saying, well, that's 3 divergences. That may reverse the market and push it lower. And it creates challenges. Paul, do you see what's waiting for you right there at those large triggers? Maybe a potential HVA trade. Possibly. And Paul, this is why I like those 13-2s. There's your 8 range triggers, Paul. There's your 13-2. Doesn't this identify that huge gap on the 5-1-2? Guys, there's a reason that we have those in the installers now. Those 13-2 synthetics on your 5-1 help you identify the gap theory in the moment. It helps a lot. All right, Sam. 50-50, medium probability, perfect entry, quick profits, break even. Great job, Sam. I think you posted that one twice. Or maybe I just looked at it twice. I do that sometimes. Safia, how do I read it? Great question. What do the thin and thick lines mean? Oh, wrong one. Just a second. Here we go. Guys, if you're curious about what the thick and thin mean, let me put this picture in the room for you. What are they? The skinny are 5-1 chart fibs. The super fat is the 21-3 chart fibs. And the fibs that extend all the way to the right, these are native to the 13-2. Ideally, you respect each and every one of them, right? But that's the difference. NG time. Let's see what you did. Odds favorable. NG, it's hard to tell what you're doing here. Guys, give me a little help when you're doing this. You were in at 77.16, which means you were in right here into one-to-ones. Above all the areas, triggers broke. Maybe we didn't reach the one-to-ones yet. I can't tell. So if there was room to the next target, and it looks like there was, you're in right at the area support inside. Not yet at the one-to-ones. Nice trade then. Respecting those termination conditions, right? I love to respect termination conditions. All right, Paul. Looks like the same trade maybe. Missed this one, Chasing's kids. They're making it difficult to stay patient this morning. It's all right. Your kids are going to be way more important, and you're doing this for them, right? If you miss it, don't chase it. That was the one, and everyone sees, right? Even Paul knows. That was the entry. That's the one at 40, $300 worth of profit before it ever turns. And this is the one where we're starting to give away advantages a little bit. Still made money on it though, right? Still made 100 and break even. Do that 10 times a day and tell me if you ever go hungry. I feel like you won't. Guys, we made it to the end of your pictures. Nice job. What are we looking at right now? Anything can happen triggers. Let's do some chart reading. What do you say? Guys, price reached an area of support. Where are my trigger lines? Are they above or below support? Is support likely to stop the market? It just means no short trades, right? Just means no short trades. Don't get enamored with this little magenta midband. Your large triggers are up. Your small triggers are up. This is an area that may stop the market. Guys, do I have a high probability trend trade set up right now? Do I have odds favorable momentum? I feel like I don't. No. So if your rules aren't met, guys, what do you suppose your best option is? Look at that. There's the same look a little bit later on, isn't it? Price reaches support, absolutely no trigger lines break through. Is this a pattern we can recognize? I think so. I don't have a trade. I don't have any rules met. But at least I'm not trying to go short into an area likely to stop the market. So what's the best bet? How about if we play if then? If the market continues, if I get odds favorable, if I get a pullback to an area of support inside of favorable large triggers, well then I'll look. But guys, look at this uptrend that we're in today. Coming straight from a termination condition. Everything above support, support holds. I'm going to move this little green box. That becomes an area where this market is likely to go based on my chart reading. Based on the fact, that's right. I'm not going long. I don't have rules met. But when I get a pivot from beyond the areas, when I pull back into support with every trigger line above, let's see what happens on the 5-1. Let's see if things roll in the direction of the trade. Got to break through these three divergences, right? Because they stopped the trend all the way back to the termination condition. If I get an up bar here, if we break above these synthetics, we're probably going to find that next key Fibonacci area. If everything remains below this price range with the loss of momentum, well then we may push lower. Notice how I said may. Notice how I didn't say I'm going to go long because this is going to happen. I'm going to go short because this is going to happen. I'm talking about what's happening in the moment. And what's happening in the moment is a little bit of indecision, but I've spent enough time in the market understanding well, you don't have synthetics. on your 8 NG time. You do have them on 7. So these aren't the native 5-1 fibs. This is. So nope, they shouldn't be there. So how do you take advantage of this pattern? Well, let your small trigger say the shenanigans are done, right? Large triggers are up. Synthetics are up. You just had a divergence going against it, right? Guys, all we did was lose momentum and push back to an area of support. These 3 divergences said that was probably the most likely option, which means that if you got in here, you had a chance to manage out. Your small triggers never get below support. None of your triggers get below support. There's not a trade to be had yet. There's not even a continuation opportunity. But we're reading indicators in the moment. We play a game of if-then. If this happens, then I'll look for this. Rather than playing a game of this is going to happen. This is probably going to happen. If this market continues up, I've already identified where it's likely to go. Eventually, you'll find a way to take advantage of it. There really hasn't been a good one. But if you know that a pivot from nowhere, that support is likely to hold, that this is your next potential spot, can't you say to yourself, I'm not going to get sucked in by 3 divergences and try and take a short trade into a problematic area. It's all we're doing, guys, every day. If then. If this happens, if my rules are met, then I'll take a trade. In NG time, this is why we don't just go long arbitrarily, right? Just because there's a gap, because the rules aren't met. We all did. I broke that lesson 1,000 times. We're still into the mid-band, right? Large triggers are a full bar away. It's still too soon for a short. It's way too late for a long. Let's see what happens. If this market continues down with odds favorable momentum, if it gives me a pullback. New trader, are you asking me if it's okay for you to break your rules? Absolutely it is. Break your rules all you want. How is that? But if you break your rules, new trader, know what you're getting into, right? Or, and here's a better version, if you see the same pattern over and over again, create new rules. Guys, the rules that I throw out in the beginning, the rules that we talk about in the beginning, this high probability trend trade, you guys know that all this is a way for you to learn to read your indicators so that you can grow as a trader. All this is an established set of rules that's been proven to win more than it loses so that you have the opportunity to make money as you grow your plan. New trader, there's traders that do exactly that. In a strong market with a clear path, they'll get in, they'll get out, they'll take a percentage, and then they'll wait for the next trade. But I can tell you that the people do that built a plan, right? They started with a foundation, they understood odds favorable momentum, they understood a clear path, and then what they did is they started recognizing these patterns that were giving them advantages over and over and over again. And they went from this plan that says my trade is the high probability trend trade, and they turned it into my trade is when I have odds favorable momentum and nothing in the way, I'll look for an opportunity to get in after the trouble, and I'll look for a way to get out before I hit the trouble. And we've got traders that are doing very well with this exact process. But this trade isn't breaking rules. This trade is trading a new established set of rules that study has provided. Does that make sense? Guys, I will never tell you what to do. Joel, thanks for being here today. I will never tell you guys what to do. But what I will do is teach you to read your indicators in the beginning, and I'll introduce you to a trade that typically wins more than it loses, and I'll give you the opportunity to focus on the absolute best of the best while you develop your plan, guys. Isn't it realistic to believe that if it takes you a day to understand momentum and a day to understand termination conditions and maybe 3 days to understand an entry, isn't it logical to think that you could be trading successfully if you can follow these simple 3 rules right from the get-go? And then as you're following them, expand your plan? That's my goal for you guys. But you can't buy step. You can't change, right? You can't say, well, I'm going to skip the steps of learning to read my indicators and I'm going to go straight to being a professional day trader without a skill set. Gary says 50-50. And he's waiting to see if things set up. Waiting to see if his rules are met. Not so 50-50 anymore, right? Guys, small below the large are wide, they're through the area. Can we go ahead and start the process, guys? Even without a reversal bar? From the top of my triggers to the bottom of my triggers, right? And then squeeze it. Where's the lowest point of resistance? Where's the highest point of resistance? Give me a Y in the room if you see it right here in the moment, ladies and gentlemen. Small below the large, larger wide, angled in the direction of the trend. If I get a reversal bar, I've identified my window of opportunity. If that reversal bar comes to fruition, doesn't this look like an amazing place to put a limit order in the event that I get a pullback? Because it's below the lowest point of resistance inside of the window of opportunity. And as that lowest point shifts because the market goes down, is it okay for me to move my stop? Do I have to stay committed to the first one? I don't feel like I do. Ziba. Why the 2 sell is all the way down? Why have sell? Because you can't see it on your 5-1 Ziba. Click that F. Your targets that you're seeing on the 13.2 are up here, off screen. Sounds good, Cal. So Ziba, see that capital F? No worries. I love these questions. Safia, who are you asking? Me? I don't know. Which chart? Are we talking about this chart? 5-1? Show me a picture. Because remember, Safia, I can't see what you're seeing. So you're saying that yours doesn't look like mine, but I have no idea what yours looks like. What was the first question, Ziba? What did I miss? 2 contracts. You bought the market, right? It's 60. Ziba, your initial stop is put in at 12 ticks. Isn't it? When you set up your ATM strategy, you put your stop loss at 12 ticks. From 60 to 48 is 12. It's right where you put it. And then if you wanted to move it, you have to click that red line, and you can move it anywhere you want. But this is your initial stop. This is what's been programmed into your ATM strategy. Took this trade. Why the 2 sell is all the way down? What first question am I missing? You're asking why the sell is all the way down here. This is your stop, Ziba. Sell S2, right? So this is your stop. You're in the trade long. You're not trying to go short down here. This is where you exit if things go wrong. Let's do this. Never gave us a pullback, guys. All right, Ziba, if I sell the market right now, this is not a rules-based trade. Dang it, it already hit my first target. I entered at 39.51. My stop, which means that since I went short, I have to buy the market to exit the position. I have to buy the market to exit the position. If I want to move my stop, I can click that red line and move it anywhere I want it to be. If I want to change my target, but it goes back to these are the opposite, right? If I enter the market, I have to sell to exit. Did you save this picture that I put in the room? Because it's the exact same answer. And you only have a big issue with it. You put your stop where the market shouldn't go. You put your targets where the market should go. If you want to move stops, click a line. You can put it anywhere you want, right? I can put my target anywhere I want. I can put my stop above the reversal bar. I can put my target at Fibonacci support. Or if I want to get out of the trade because I made a mistake, I can just hit close. And this is great questions because, guys, these are things you ready, Ziba? That's because you're brand new. Tell you what, I'm going to take 2 minutes. No worries. I'm going to take 2 minutes and go reload my water real quick. When I come back, guys, we're going to do this exactly. Let me show you what we're about to do. I'm going to go to that example plan that we talked about, right? Ziba, you remember this one, identifying your entries? Odds favorable, momentum, nothing in the way. Enter in an area inside of favorable large triggers. So that's your first task. Your first task is to get into the market at the correct spot, right? And Ziba, I love that you put that you said you don't know when you're in trouble or when you're in not trouble. And this is why we have this very mechanical approach to management for brand new users. We're taking an approach that Ziba doesn't require you to read indicators. It doesn't require you to know if you're in trouble. It doesn't require you to know anything other than a couple simple things. So when I come back, we're going to talk about that. And then when I'm done talking about that, I want you to ask any question that you have. And guys, this is going to be a fantastic way for you new users to take that emotion, that need to read indicators out of your management in the beginning. Ziba, you're right where you need to be. I want you to keep reminding yourself that. You are in the exact perfect spot as somebody that's brand new with the software. I will be back in just a minute, guys. Let's talk management. And let me find our little talking piece. All right, so Ziba, I want you to remember, and guys, this is for everybody too. What we're doing initially is we're creating this foundation, right? Learning to get into the market at the correct spot. Is everybody comfortable with that? We're learning to understand odds favorable momentum. We're learning to understand when there's no termination conditions. And you're creating this repetition so that every time you get into the market, you're giving yourself the highest chance of success, right? We're looking for that area inside of favorable large triggers so that we can have the best chance of success, the best management. That's the top of that plan. That's what we're looking for. So once you get into these trades, right? Once you learn to take these entries, and guys, it doesn't take long to take the entries. You're going to have to ultimately understand how to manage these trades. So initially, a mechanical approach that eliminates emotion or opinion, because Ziba, you don't know when you're in trouble, right? You don't know when you're not in trouble. So a mechanical approach that eliminates emotion or opinion tends to be the most straightforward approach for new users. And you can alter your plan after you're done with the education as you get better at reading your indicators. So if you trade 2 contracts, the initial stop, I'm going to open it up in a new link. The initial stop is going to be at 12 ticks, right? The initial stop is going to be outside of that window of opportunity. And you should be able to, if you're understanding entries, you should be able to identify that window of opportunity. And when you enter the market, your initial stop is above it. Is everybody comfortable with that? I'm in the market. We put it at 12 ticks initially, guys, because you need to have time to move it to the correct spot. And then it'll be adjusted above or below the window of opportunity, right? The initial stop will be 12. That'll be your input into the ATM strategy. And then you'll move it outside of that window of opportunity. Your stop will be moved 2 ticks above or below a reversal bar in the direction of the trade. So guys, when the trade gets working, if I get a reversal bar in the direction, I'm in a short trade, my stop was up here where the market shouldn't go. I get a reversal bar in the direction of the trade. So Ziba, brand new users, your first movement is clicking on that red line and bringing it 2 ticks above the reversal bar. So far, so good. And I want you to read the bottom of this. Right now, there's nothing to do. You're either stopped out of the trade or your first target gets hit. These are your only options because you're keeping it mechanical, right? You're not worried about what the indicators say. You're not worried about your emotions. You're not worried about anything other than putting that stop 2 ticks above the reversal bar. Is everybody comfortable with this so far? Very mechanical, right? The first profit target is $100. When it's reached, your stop moves to break even. So the market comes down to my first target. It hits it at $100. My stop gets moved from 2 ticks above the reversal bar, and I put it right over my entry price. So now what am I looking at? I have $100 in the bank, right? Brand new users, this high probability trend trade, this is your way to take profits quickly to get that memory of success. I have absolutely nothing to lose. And at this point, I won't move my stop again. I don't have to make any decisions. Either my second target gets hit or I'm stopped out for break even. If the second target is hit, I'm out of the trade. I've got $300 profit. And Ziba, I love that you said, well, I'm not sure when I'm in trouble. I don't know when I'm not in trouble. This right here, this plan, this very simple mechanical plan, you can practice this on simulator. You can practice this in market replay. But what you can do is you can go through with this very straightforward, very basic, very mechanical. And then you're going to practice this approach, and ultimately you're going to adjust your targets based on your experience later. Does that make sense? Does that help a little bit? Take some of the stress. Hey, Cal, take the stress out of management initially. Focus on your entries. Remember, we don't have to make all the money on day one. We just got to nail those great entries, put ourselves in a position to have manageable trades, and then we'll take all the emotion out. And as you learn to read your indicators, your management plan, well, Ziba, you practice it. Me being able to do it isn't going to make it so you can do it, right? What you're going to do, Ziba, is every time you take that entry, I don't have any rules met. Cal, it's right above you. If you click on it, you can download it right onto your computer. But it is on its way. Can you see the chat box, Cal? Every time I share something in the room, that right there, if you click on it, you'll be able to download it. I already emailed you a copy. I'm not going to hold out on you. But you can grab them straight from the room. By just clicking on that, it'll download it onto your computer. And guys, I'm glad to email anything I have to you. You can also drag it to your desktop. I didn't know that. So I can take this, click on it. Oh, look at that. I drug it right over to my desktop. And I can release it. And there it is. Oh, George T., that's brilliant. That's so much easier, isn't it? I'll click on it, left click, drag it over, and drop it right onto my desktop. That's awesome. I had absolutely no idea. Guys, I'm a student too. All right, Ron, let's see what you did. When small triggers ride price, this is a good look for me. Because they don't get to the weak side, right, Ron? That momentum is staying right there. Nice trade. Nice trade. It's not a high probability trend trade, but doesn't it have momentum and a clear path? You're welcome, Cal. Just a great way to take your chart reading and turn it into a plan that makes you comfortable. NG time, let's see what you did, my friend. Guys, last hour I like to put it on you. What do you want to talk about? And now they're coming up huge. Isn't that funny how that works? There we go. So NG time says when he has a termination condition that creates a full reversal, that gives odds favorable momentum, that puts the small on the correct side of things, he loves to take an entry at an area of resistance inside of favorable large triggers, exit at the first trouble spot, get to break even plus a little, and have a plan for exit if the things change. NG, picture perfect. Picture perfect. NG, do you need that gap theory trade? Did you need to go long right here? Oh, guys, focus on the best, right? Your brain's going to tell you you need more trades to make more money. Do you guys know what that $170 is? Or what was your first target? You made 49.59. You made 130 on your first contract. Guys, on a 10 lot, that's $1,300 on his first contract. On a 100 lot, that's $13,000 on his first contract from that same trade with the advantage of momentum, the advantage of a clear path, entering in an area where the market is likely to continue, using chart rating to identify trouble spots, having a management plan in place to protect profits. Guys, it's not about catching every move in the market. What it's about is catching the best moves. All right, what do we have here? This is the S&P, guys. Termination condition creates a full reversal, gives me odds favorable momentum. All right, Zeba, we're going to see if we can get lucky enough to go through a little management here, okay? It may or may not pull back. I have absolutely no idea, but I'm going to leave a buy order right here at an area of support right inside of favorable large triggers. Guys, I'm not saying that this is a trade for you to take. This is a 50-50 trade. I don't know if there's divergence. My large triggers are well below the areas. Oh, Sam, we've all done that one. Let's see if we can get lucky enough to get in and manage a trade, right? Zeba, target 1 and target 2 are predetermined. $100 and $200. Until I get filled, I can't possibly have any idea where those targets are, right? Because I don't know where I've entered yet. Isn't it, Claire? So here's my odds favorable. Haven't reached resistance. Let's see if we get a reversal bar. And let's see if it comes back to support right at those large triggers. There's my reversal bar. So all I did is I drew a box from the top of my triggers to the bottom of my triggers, from my lowest support to my highest support, and I'm putting an order right there. Does that make sense, guys? Guys, I don't tell you to take trades. All I do is teach you to read indicators and talk about rules. Am I in control on whether or not this market comes back to get me? Not so much, right? But can we say that my rules are met, and because my rules are met, if it does come back, I've got the makings for a great trade here, one that typically wins more than it loses? Is everybody comfortable with what they're seeing right now? Guys, I'm going to fudge my entry just a little bit to try and guarantee an entry. This is not an area inside of favorable large triggers. My window of opportunity is much lower. I just want to get in because I want to go through this management process. Absolutely, Angela. Let me give you a picture of it too. There's my inputs. Oh, it's so close, but it didn't get us. I'm even trying to cheat. And Angela, if you need any help, let me know. Gary, let's see what you've got. No termination. You're not looking for that HVA. All your trigger lines remain below the area. Great read, right? Great read, Gary. All right, this thing's just going to mess with us a little bit, isn't it? Zeba, I promise I'm trying so hard to get you a live example. I don't control the market, though. If I did, I'd be doing great. I'll tell you what. Can we break rules for a second? Teach you how to take a loser? Make sure that I have my ATM strategy. And let's break rules. Directly into a termination condition, right? Oh my gosh. No areas inside of favorable large triggers. Holy smokes. Large triggers are still below the area. Oh, this is not a good look. But you know what? It doesn't matter because the management can be the same. We're all going to take mistakes, right? I just accidentally went long. So Ziba, my initial stop is below the large triggers, below the window. And it's set at 12 ticks, right? Are you comfortable with that? My first target is at 100. My second target is at 200. This is a suicidal trade, and you're probably going to see the stop hit before the targets ever do. I bought the market, which means that I'd have to sell those two contracts to exit the market. Does that make sense? And here it comes. Because I broke rules, I'm not expecting to win this trade. There we go. My stop was where the market shouldn't go. And when it went there, I exited the trade. Because I bought, I was able to sell and exit my trade. Does that make sense? Does that help a little bit? Kind of seeing it in the moment. And then here, same thing, directly into a termination condition. Come get me. My initial stop, since it's inside of the window of opportunity, I have to put it below the window of opportunity. That's ridiculous risk. My first target is $100. If it touches my first target, if I get a reversal bar, let's see if this one will let us work it out. It may not. It might. My initial stop, where the market shouldn't go, below the window of opportunity. Give me a Y if you see it, guys. This is not a good entry, nor is it a rules-based entry, nor am I suggesting that you should be in a long position. Safia, I'm breaking rules just for the sake of stop placement, stop movement. I have a termination condition, guys. It's ridiculous to go long here. We're hoping that it breaks the rules for a lesson. Just give me a reversal bar. Probably won't because fibs are amazing, right? If nothing else, we're getting a lesson how trading into a termination condition doesn't work. But let's see. So right now, my plan says if I get a reversal bar in the direction of the trade, I can click on this red line and I can put it 2 ticks below that reversal bar. Until I click this again, it's very much still a stop down here. So guys, everybody do the up dance. Let's see if we can get a reversal bar and reduce our risk. Come on, reversal bar. Come on, reversal bar. And you're going to do that live too. Come on, reversal. There it is. I move my stop 2 ticks below. My first target was reached. I move my stop to break even. And guys, now the only choice I have is either my second stop gets hit or my stop gets hit. Ziba, there it is, live. Mechanical. Do you notice that I never talked about trigger lines? I never talked about anything other than that very mechanical approach. You know what's amazing is I've got $100 in the bank and I can't lose. And it came back to an area of support inside of favorable large triggers. And I know without a shadow of doubt that there are people in this room that are in this trade right now because of the strong bottom, because of the odds favorable, because of the look on the 5-1, because of the look on the 13-2, and they just hit their second profit target. It's not a high probability trend trade because of that resistance. You didn't have the advantage of a clear path. But I had so many advantages. That's not a bad way to make $300, is it? But you notice that I didn't talk about anything. I didn't talk about the potential for this, the expectation of that. It was 100% mechanical. What does that do? That eliminates my emotion, that eliminates my opinion, and it keeps it mechanical. Ziba, did that help a little bit seeing it live? You're welcome. Good. So now it's just up to you to practice it. And now let me ask you, Everybody, do you have your management plan written on a piece of paper in front of you? Have you studied it? Have you gone through those pictures? I mean, have you really gone through the pictures and read the words so that you can begin to practice this, so that you know what you're looking for before it happens in the moment? It takes a little bit. It's just practicing, right? And Gary, yeah, we talked about that. It was the termination condition. Rules not met. But it doesn't change the fact that we were able to go through that mechanical management approach, right? Guys, and the market was wonderful to us. The market gave us a lot of help so that you could get a management lesson. And now that termination condition is doing exactly what we would expect a termination condition to do. Sometimes from a really strong bottom with that much momentum into an area, there's a retest. We took advantage of it here. But you'll notice that the sound of my voice didn't change. I didn't get anxious. I didn't get nervous. I didn't get worried. All I did was say, if I get a reversal bar, then I move a stop. If my first target's hit, then I go to break even. If my second target's hit, I'm out of this trade with $300, and now I'll wait for the rules to be met before I take my next trade. Does it make sense, guys? What's standing? I love this. What do you suppose is the only thing standing between you and trading profitable right now as a brand new user? Just following rules, right? Can you commit to a spreadsheet or to a checklist? It works, doesn't it? Haven't we seen it work over and over? New trader, if I'm in a trade, I can move my stop to break even by clicking that stop line and putting it at the price that I entered. And then I'm break even. But if I do that too soon, it pulls me right out of the trade, right? So I have to have a condition. If my first target is reached, then I'll move to break even. And guys, remember, you're on simulator. If you're afraid to lose money on simulator, you're going to be terrified when things go live. So you're doing that process over and over, right? Doing that process over and over and building confidence in your ability to follow the rules, building confidence in your ability to manage. And it takes repetition. And Paul, amen. Absolutely, new trader. It'll still be there. If my first profit target is reached, I can still see my price, which means I can click that and go straight to break even. So now at this point, either my second profit target is reached right here at this divergence high, or I'm out of the trade break even, or I go break even +1. But if I arbitrarily move my stop because I'm afraid to give any back, well, I might not reach my profit target. The market may stop me out and then do exactly what my indicator said it was going to do. And that's why having a plan makes it easier. Does that make sense, guys? You ready for the best lesson? This $320 means jack squat because I didn't follow rules, guys. I jumped in, I broke rules, I didn't follow my rule. I mean, this $320 breaking rules is damaging because I'm convincing myself that I can do silly things and get paid for it, right? So have your plan, follow your plan. Actually, Ron, that was probably yours. Just have a plan. Know exactly what it takes to get in the market, know exactly what it takes to get out of the market, and know exactly where you're going to move your stops if this happens. Once again, termination condition, right? Even with odds favorable, termination condition. Every rule is met except number 2. Who's going to take this loser? Or is it going to be a winner? Is it going to break rules? There's my stop outside of the window of opportunity. There's my termination condition saying that the market probably isn't going to go up any further, right? I'm in at the window. I've got my target in place. So Ziba, what has to happen for me to move my stop right now? Absolutely, Sam. What am I looking for mechanically to take my risk from this way down here and reduce it? If I'm following that simple plan, guys, I need a reversal bar. I need this bar to go up to this gold line and be green. Otherwise, it's probably going to come off that termination condition and smack directly into that stop and pull me out of a trade. Does that make sense? Does everybody understand how the rules aren't met here? How I do not have the advantage of a clear path? And no matter how much I hope, I'm breaking rules, aren't I? I'm breaking rules that have been proven to give me an advantage. If this market goes up for the rest of the day, does it mean that my rules are wrong, or does it mean that it's a one-off? This is just a reversal bar marker, Racha. This is the price at which this bar becomes an up bar. This white line is the reversal bar marker on my 13.2, and it's the price at which this bar becomes a reversal bar. Angela, I actually do 12 on either, and 12 is an arbitrary number. Have fun with that. I don't spread mulch anymore, Ron. 2 spine fusions killed my mulch spreading days. Angela, 12 ticks, 15 ticks, 38 ticks, it doesn't matter because I'm going to move it outside of the window of opportunity, right? 12 ticks gives me time to react. Does that make sense? 12 is an arbitrary number that gives me time to react. I do, Ron. Cool. There's my reversal bar. I'm 2 ticks below it. Mechanical, thoughtless. I went from 12 ticks to 5 ticks of risk. If my first profit teached, I am, Paul, I'm trading right into a termination condition. So much so that I said it at least 5 or 6 times to make sure everybody knows that the rules are not meant for a high probability trend trade. We are merely going through the process of moving stops on a mechanical approach. Reversal bar, 2 ticks below the reversal bar, I have minimized my risk. At this point, either my stop gets hit or my first target gets hit. If my first target gets hit, I'm going to click on this red line one more time. They're messing with us, right? No, D. Mechanical. That sounded like fear to me. Profit target hit, and now I'm break even. So what are my options now? Either my second target gets hit at 77.06, and I'm out of this trade, or the market comes all the way back. And this may be a point. I would call it low probability, George, because I'm trading directly into a termination condition, and I don't have any indication that that area is going to break. But because I have such a great entry with all this momentum, look how manageable it becomes. There we go, guys. Focus on the best of the best initially, And you'll learn when it's time to break your rules with a little bit of style, right? But that mechanical, that's the only thing that I wanted to illustrate there, guys. I had the advantage of momentum. I had the advantage of an area. I did not have the advantage of a clear path. But because I took such a great entry, I was able to minimize risk. I knew where this market may turn, right? But that momentum gave me at least a push to retest it. And ultimately, it went beyond. Guys, that's emotionless. The only thing I did was follow a plan to the letter, and you have to practice it. Ziba, does that help? A little reinforcement through repetition? I agree. So what's happening now, guys? What do we see on our crude oil chart? Waiting for an area to clear, right? I need those small triggers to get up and above. I need to at least have a fighting chance here. Let's see if it happens. We'll go through the process again. Smalls are breaking above, large are still below. Just for grins, I'm going to go ahead and start planning out a potential window of opportunity. From the highest point of my triggers to the lowest point, and then whittling it down to the highest point of support, to the lowest point of support. But do you notice, once again, my trigger lines haven't made it through resistance? Do I have the advantage of a clear path? You're going to have to answer this question on the fly, right? New trader says no. So technically, new trader, there's not a trade for me, not a high probability brand new user trend trade. How many times do you suppose I'm going to get lucky today trading in determination conditions? How many times am I going to push it? I can tell you that 60% of the time it works every time. Actually, probably 60% of the time it loses every time. Let's see what it does on this one. Small triggers never made it through. And divergence printed. Came right back to a win area of support, right? Guys, this isn't my trade. I'm not going to tempt fate twice. There's no way I'm putting this on simulator. But because my rules aren't met, I couldn't care less. Couldn't care less what happens after. And guys, true story, I would never in a million years take this trade in my own personal trading account. Even though it worked, this isn't my trade because I believe in a clear path. I believe very much in a clear path. So much so that I had every intention and anticipation of that stop being hit. That was my expectation of the trade, that it would lose miserably. The market had other ideas. Does that make sense? Guys, is everybody comfortable with this? What we're looking for, why we're looking for it, where we're looking for it, and then understand that the next step is learning what to do with it, right? Focus on your entries. Let management, guys, keep it mechanical, keep it methodical. All right, I'm going to close out my workstations real quick, guys, and what I'm going to do is I am going to try to set up market replay for you guys. Hopefully it plays along with us. Best fake money trade of your life. 50-50. You take the second entry. Bingo, bango, bongo. Re-entry right there. Nice job, Paul. All right, guys, let's do market replay. I'm going to set it up for you. This is how we're ending class today. I'm going to come to the instructions. And I'm going to post them in the room. You guys can have these instructions, practice it all the time. We're going to go File, Utilities, and guys, I'm going to download market replay data. Once I click download replay data, it's going to pick my symbol. Guys, crude 323 isn't a thing anymore. So I have to make sure that it's crude 423, or I have to make sure that it's the current market S&P. The date, today is March 1st. I'll go ahead and make it March 1st, and I'm going to click OK. Once I click OK, it's going to say downloading replay data, ES323. Is everybody comfortable so far? Zeba, are you watching? It's playing nice right now. Guys, how do you get 20 days experience in 10 days? Market replay. How do you get a year's worth of experience in 6 months? Market replay. How do you practice management? How do you practice entries? How do you take pictures and recognize termination conditions when the market isn't moving? And you got that message, yeah, Zeba, that was them, not us. So see how it's still downloading? When it's done downloading, I don't know, Sam, show me a picture. And Sam, when I talk about termination conditions, is it price beyond a fib? Or is it triggers beyond a fib? Oh, guys, it went away. It no longer says download. So here's your next step. I'm going to disconnect from my live feed, and I'm going to connect to my market replay connection. And when I do that, it's going to give me this old Sony Walkman. Notice that the date goes from August 2022 to 3/1/23. Let's make those dates line up. So let's go March 1st. Whoops, I wanted March 1st, not March 2nd. March 1st to March 1st. And guys, you can even slide it ahead to like 5 a.m. Maybe that's when you start trading. You don't want to worry about the overnight stuff. Everybody comfortable so far? And then we just need to build a chart. Let's see if it'll let me open my S&P charts. And typically, you have to build charts. I'm going to see if it's going to let me do this. It may not. But guys, that's all you have to do. Sam, show me the picture. I can't see your charts, and I don't have charts up. Show me the picture, and let's talk about it. Cool. So right now, it's just running all these calculations, right? We're waiting for it to come through. But I am pretty sure that this isn't going to work out. It got rid of my market replay. Nope, it's still there. We're good. So let's give it just a second to come up. Let all those calculations come through. Here we go. So the 5-1's coming up. Notice that I'm at 5 a.m. today. Yes, I sure did, George. Fingers crossed. I think it was you that said this is possible. I've always just built charts, and I think you mentioned it once. And I'm a stubborn old man. All right, so I have my workspace. I have my 13.2. I have my 5.1. What I don't have anymore, and this is why you have to build charts, what I don't have anymore is my market replay. I don't have my market replay controls. So I'm going to disconnect from market replay, and I'm going to reconnect to market replay. So George, yep, didn't work. There's my controls again, 3.1 to 3.1. So I'm going to go File, New, Chart. I'm going to build an S&P chart. I'm going to make it a 13.2 chart. And guys, all of this is in the instructions, how to build this chart. This is good practice for you. And I'm going to put that 13.2 Renko chart template on it, and I'm going to hit OK. And it's going to come up over on the other side. Sam, let's see what you got. Smalls above, large below, not a clear path. 50-50, right, Sam? The perfect read. Don't worry about price. Worry about triggers. Small triggers are through, large triggers are not. 77.05.06 has the potential to break, but it hasn't yet broken. Sam, does that make sense? Don't worry about price. Worry about those triggers. That's going to be your indication. When price reached resistance right here, and all the trigger lines were below, well, that was a termination condition. When the small triggers broke above that area that price reached, now we have a 50-50. If the large triggers get to the other side, then we have a clear path. Does that make sense, Sam? No. A clear path, Sam? How could the path be clear if it only has the potential to break? That's like saying that there's no traffic except for these 100 cars, right? Smalls break through. Support has the potential to break. Both trigger lines break through. Now it's broken. Now I have a clear path. Clear path is absolutely not. Clear path insinuates that there is nothing in the way. It's 100% clear. Does that make sense? That was a good question because I think that cleared some stuff up. Awesome. Guys, here's your 13.2, right? Historical market replay. I need to build a 5-1 as well, don't I? Because I need an entry chart. 10 days back. All of these settings are for you in the instructions. Put the template on there. Here comes my 5-1 chart. I'm going to let it calculate. I'm going to let it come through. Zeba, so you almost got there. It just wasn't giving you the data. Building that 5-1 chart right now, guys. And then once I do it, I can trade today's market. There we go. Watch this. I can set up the two charts that I built. Look at the timestamp. This is midnight last night. I can make sure that I have an ATM strategy in place. And if I hit play, guys, I'm replaying this morning starting at midnight. At 1 time speed, market's not doing anything. I can go 2, 3, 4, 6, 8, 10, 15, 20, 30, 50, 100, 2, 3, 4, 500 times normal speed. So I can fast forward until my rules are met. I can trade it just like it was live. It'll put me in. It'll take me out. It'll hit my targets. Trading just as though the market were live, right? At 500 times speed, it's difficult to do it. I can move my stops. I can keep my targets. It stops me out. It does everything. 500 times, guys. You don't want to do that. So keep it manageable, 20 or 30. Get it to that odds favorable. Get it to no termination conditions. And then slow it down to 1. And if you're not sure, pause it and analyze and take the trades that fit the rules. And then all you have to do is close them out, disconnect, and shut it down. Guys, great class today. I hope that helped a little bit on stops and targets, guys. I hope it helped a little bit. Absolutely, Paul. And then bring the photos of everything that you do on Market Replay to class so that you can get feedback on everything that you're doing. Keep it simple, guys. I'll see you in the morning. I appreciate every one of you being here. Take care. If you trade this afternoon, take pictures, bring it to me. Safia, did you get the picture of what the fibs are? Okay, just wanted to make sure. Cool. Guys, take care. I'll see you in the morning. I appreciate you guys being here. Be good, everybody.